me, Gregory Mannarino. It is Wednesday, February 8th, 2023, and no, absolutely freaking no. I did not watch the State of the Union last night. Why am I bringing this up? So every morning I check my email box and it's like, Greg, did you hear this? Greg, did you hear whatever Biden said? No, I didn't hear. I told you I wasn't going to listen to that thing talk. I didn't feel like subjecting myself to a bombardment of lie after freaking lie after freaking lie. So no, I have no idea what he said. I don't care what he said, and whatever he told you is all, frankly, a lie. So what else can I tell you here? It's not for me. I will not listen to that man talk. It just ain't happening. So just let's forget about that. But what I do want to bring up, okay, is I got a lot of flack about this mid-year market crash prediction by Jim Rickards. Now listen, a lot of you made it clear to me that you think Jim Rickards is smarter than I am. And you know what? Maybe he is smarter than I am. But I just, look, you know my take on this. And you should, those of you that are writing to me about this should know better. Nobody can point to a specific time in the future where a market crash is going to occur. Now, according to Jim Rickards, and I did a little more research into this, his thesis is once it becomes apparent to everyone that we are in a recession, that's when the market's going to crash. Now, I don't get that. I'll be honest with you. You also understand, those of you that I really hope grasp the concept of how cash moves through markets. You should be aware of the fact that, again, and I'm going to repeat it, this big crash, whenever the big crash occurs, it's not going to begin or end in the stock market. The driver of the market, which is the global debt market, is where it's going to begin and end, period. Now, I haven't, again, on the research I have done with Jim Rickards' last prediction, I didn't hear him mention the debt market at all. It's about recession. It's about all the other kind of stuff. Now, the drivers of this market is what's driving the freaking market. So let's just throw this out here, because there's people out here, let's see who's going to be right, Jim Rickards or Greg Mannarino. If in fact, and you can check my last video, I said if the debt market blows up by mid-year, well, then Jim Rickards will be correct. It's all about the debt market. It's not about the damn stock market moving up and down, which it just does on a normal basis. The crash, and I mean crash, which is coming, is going to be biblical. Because, again, it's this global debt hyperbubble that's suspending all this up. It's all propped up on the back of oceans of debt, and central banks are not going to stop fueling this, at least for the foreseeable future, because why? They have not created, in Greg Mannarino's opinion, enough dependency on the system, enough slaves to the system, and then on top of that, they haven't acquired enough assets. What did we hear just yesterday out of its mouth? It being Fed Chair Powell, the Federal Reserve, is not even considering selling assets on their books. Well, no. What he won't tell you is they're going to acquire more. So, look, with regard to Jim Rickards, I already told you, I think the guy's a smart man. I really do. But unless I would speak to this man on the phone, and he can, or in person, and I'm willing to set up an interview with the man at any time, and I'm not trying to counter the guy at all, okay? I just don't understand how anyone can make a prediction like that without addressing the main problem, which is the global debt hyperbubble. That's what's going to precipitate this whole thing. And I believe, at least I hope so, you get it if you realize what's driving world stock markets. Let me put another perspective on that. We understand that central banks around the world have kept rates suppressed now, artificially suppressed since the last meltdown. What has that done? It's created an environment of risk, cash moving into the global equity markets or stock markets. It has reinflated a global housing bubble. In the same way that the artificially suppressing of rates has created a bubble here in the stock market and a bubble here in real estate, the reverse is going to happen when we get a meltdown in that debt market. You understand? That's the big one. That's the big crash. Okay, is it possible that this market could fall 20, 30% and still be normal? Absolutely. That's a fact. Even 50%. Okay, but when I'm talking about a crash here, I'm talking about a 90% drop, 90 in the S&P 500. Yes, from its current levels, this stock market could potentially fall 90% with regard to the S&P 500. So anyway, I hope this clears up what's going on. Like, look, I don't mind starting a little firestorm here or there, but people, get with the program here. You should listen to what I am saying, and it should make sense to you. I know we got Michael Burry over here. Now we got Jim Rickers over here. Michael Burry said an imminent, as in now, drop. And then you got Rickers talking about a mid-year crash. Okay, I can promise you that if the debt market is stable by mid-year, this market ain't going nowhere but higher, okay? But you and I know where to look. We have the tools to do it, okay? Watching global bond yields, watching the relative strength of the dollar, watching the MMRI, okay? And which is sitting at about 235 right now. Let's focus on the market real quick. So pre-market right now, you got stock futures lower. Not much, lower nonetheless. You got a slight bump higher in the 10-year yield. And you got some weakness in the relative strength of the dollar, as I said, MMRI sitting here around 235. So nothing dramatic here. You got crude oil yesterday about 4.5% gain. Today we're up another 1% pre-market, and that's a main driver here. Crude oil getting propped up has no business being here. $29 a barrel is probably a fair value, maybe even less than that for crude, in my opinion. Based on what I see going on here, okay, demand concerns and production and everything else, okay, so $29, but we have crude oil now sitting at almost 80, okay, but again, you know how it works. Crude oil gets propped up or bid higher, the entire energy sector gets bid higher, and then of course the financial sector, who finances the whole damn thing. That's how it works. It's not hard to understand why things in the market move the way they do if you understand the dynamics behind it. You understand? I hope you do. With that said, you got gold and silver aren't doing too much today. Bitcoin isn't doing too much today. At least right now, the trading doesn't start for about 40 minutes. Okay, but look, nobody here has a better perspective on this market than you do if you follow this blog. Everything that we have covered is happening. Check my videos at the end of last year, how I was saying the Fed isn't done. We're going to see this market go higher, and that's exactly what we've seen throughout January. Now, I know a lot of you out here, trust me on this one, are hoping for a market crash. I understand that, but you better be careful here what you wish for, because even if you do not have exposure to the stock market here, that doesn't mean that you're not going to feel it. The market crash that is coming is going to be the biggest one ever in history. You could take every single market crash before the one that's coming and combine them. It will not even be close to what's coming here down the pike. I think you are well aware of that. And if you don't believe that just because you don't have exposure to the long end of this stock market, you're not going to feel it, you're going to feel it in a big way. Even if you don't actively participate in owning one single stock, you're still in the market. How are you in the market? By transacting in central bank issued notes, by owning real estate, by leasing or owning a car. All of this is going to change here. By buying food, by you going out to the store and purchasing food, you're in the market here, okay? You cannot escape being in the market or participating in this thing one way or the other, whether you own a stock or not. If you're transacting, if you're buying assets, if you're using Federal Reserve issued notes, you're in the market, okay? The dollar is a tradable asset. So are commodities, so is food and everything else connected to it. So whether you want to be in the market or not, I got a big, fat, ugly message for you. You're in the market. So a market crash, which is coming on a biblical level, is going to affect you more than you even realize. Okay, maybe most of you out here are going to lose your jobs because if we get a 90% crash in the S&P 500, 90, and I think that's going to happen. Well, if you think you're not going to be affected by that, your neighborhood, the people you care about, your families, your children, their educations, it's going to affect the world in a way that I think most of you are not prepared for, unfortunately. Anyway, look, with that said, I'm certain that I've covered a lot here with all of you. I hope you've gained a perspective on what's happening, on what you can look forward to moving forward. So with that said, please, I want to hear from you. Comment. Greg, you got it wrong. Greg, you got it right. I really do believe that most of you see eye to eye with me. We're on the same page. I'm making sense to you. At least I hope so. And if I'm not making sense to you, then you're in the wrong place and you need to connect with someone that is. Look, I live and breathe this market, live and breathe the economy, what's going on. I'm a macro guy. I study it constantly. Constantly. There probably isn't a moment of the day where I'm not thinking about it, except when I'm maybe working on my cars. But that's a whole other thing. So I'm immersed in this. And what do I always say? If you want to be successful at something, you have to become that thing. Now, my calls are not always correct. No one's calls are always correct. It's an impossibility. What guys like me do is try to come up with the most likely scenario. And, sometimes because dynamics are changing very rapidly, and that's what makes this business so interesting to me, is you're looking at a set of dynamics that are in play. You come up with the most likely scenario. Then all of a sudden things change and then you got to reevaluate. And that's what makes it challenging, at least to me. It can drive some people out of their minds. And I'm willing to admit that this freaking thing, it can drive anyone mad. That's the truth. But anyway, you all know this stuff here. So here's the situation. You are going to see me later, okay, live, 10 a.m. Pacific Standard Time, 1 p.m. Eastern Standard Time, and we're going to talk about what's happening. And more importantly, I want to cover questions from you, all right? And I've been doing this every time. I'm looking through the live chat and I'm answering questions. And I really want to do that. It's all well and good when I sit here and I do these interviews, which I hardly even do anymore, okay? I don't have any time for them. But I have time for you, all of you that follow this blog here. You're my base, you're my family. And we're gonna get through anything they want to throw at us. Anything. They want, even a 90% stock market crash. We're gonna get through it all because we have each other's backs. We have each other's backs. I don't know another way to put it. All right. Love you from the heart. Please comment. Please share the video. It's so important. Thumbs up down here if you think I've said anything here that you appreciate. All right. I'll catch you on the live stream.